Hello everyone, today we're going to go over our Roth IRA portfolio. Today is December 1st of 2025, so we're going to talk about how August went for us. So, point in case for the month is that the market's getting a little more difficult. It's slowing down a little bit. It seems like returns aren't as crazy and consistently up as they used to be. So, I think a good way to see this is let's just look at the chart, right? So this is at the end of December 1st on Monday. So we got today's results, but as you can see, today was down a little bit, so it doesn't really help me or nothing. So for one day, down 0.35 about. 1 week, we're up 1.75. It's a little bit of a rally. But if you look at the past month, we're actually down 1.6%, which in my memory, this is like one of the first times in months that we've actually been down month over month. So that's interesting. Look at 3 month, we're up 8%. Look at year to date, up 19.41%. And then 1 year up 17.9%. So I mean, you can see, just like look at this chart, how month over month it looked like we were just consistently going up. It even seems like in October we squeaked out a new all-time high there, even though it started as a little bit of a lower month. But then you got the end of October here, and you'll see that we were down quite a bit. November 20th had a little bit of a pullback, but you can see that the end of November sits a little below the end of October, beginning of November. And granted, that was you had a really good push at the end of the month over there, so it is what it is. But point being, I think Robinhood says we're about like down $300 where we would have been. So interesting to look at. There's a lot of factors in this. I've been a little bullish on the market the last year. Stayed invested nonetheless, which has paid off well, but it's starting to get to that point of, is AI spending actually providing the profit that we're looking for these companies, and do they have profit to show for those expenditures at all? And I know a big argument is that they are depreciating these assets over a longer term period than they actually should be. For example, they're saying 6 7 year depreciation, 6 7, but in reality it might just be something like 2 years, especially with the constant innovation that we're seeing in the whole GPU market. They're not as useful. They're not lasting as long because the technology is advancing so fast, which is great if you're buying the new one, but if you're not, then it's not as good. It kind of reminds me like maybe if you had the iPhone 4 and then in 3 years you got the iPhone 7, no one wants the iPhone 4 because iPhone 7 from that period was such a big jump that the iPhone 4 is worth a lot less. Nowadays, if you buy it, maybe a couple years it'll retain its value because they don't do jack. But the point being is the innovation is so fast, the deterioration period for these products are actually moving a lot more rapidly. So they might be spreading out their expenditures on their asset sheet longer than they actually are to make it seem like it's more affordable right now. But reality does have to catch up to them that these things are depreciating, and I don't know, maybe makers will come out and say these have to be depreciated faster, but in reality it's probably not going to be. So a bit of an accounting trick that a lot of people are doing to kind of boost their profits on that. But people are saying, okay, now what revenue are we deriving from AI, right? If you used AI, you might think, oh, well, this is really great for my life, right? But I'm not going to pay for it. And I'm not going to pay for a lot of these aspects, especially when the competition is so fierce and a lot of it is free. You can just go to all these people and use free it. And then maybe you get like a max for the day, but then you just make another account. So unless they got some sort of IP bans or nothing, I don't see people paying for it. So that long-winded explanation is saying, hey, is AI actually making that big of a difference? I think it's making a difference in a lot of aspects, but in terms of like an AI agent, is it? I'm not sure. The expectation is there. That's the thing. So people are expecting high growth out of these things, but are we seeing it? Not quite sure. It's been about a year or two. Okay, guess we're in nighttime mode. So now if we look at Bitcoin, this was interesting. So see, up for the day, down 2% for the week, down 21% in a month. I'm not a big fan of Bitcoin, just because the way I like to do things where you discount cash flow it. There's no cash flow behind Bitcoin. It's kind of, everyone just likes it, so that's the reason it has purpose, which you could argue is the same thing with our fiat currency, where we have people trust the dollar, so they use it, but people have trusted it over hundreds of years. It is the global central reserve currency. Bitcoin isn't as a mass adapted as that. Sure, it's come a far way, but I don't know. I'm not a big fan of it. I don't really want to touch it. I'd say as my assets grow, once my net worth maybe hits like 6 figures, then I could look at potentially picking some up. I think at this point it'd be kind of waste my money, honestly. But point being is that it's been down lately, which is interesting because I mean the federal government has made great pushes towards it. A lot of other countries have been trying to adapt it. So it has widespread use more or less, and it's being adapted by official agencies more and more. But as that's happening, it seems like it's actually going down. I mean, you can see the push that happened beginning in 2025 to now. I mean, it's still up a little bit since the beginning of the year, right? So that's nice. You can see it pushed all the way up to a peak of 123K, and now it's at 86,000, which to me is just, I don't know, that's crazy. Personally, to me, that's just kind of insane. So, I mean, that's, gosh, down quite a bit, almost 33% of its value from all-time high. So that's a big swing for Bitcoin. I mean, normally you see like 10-50% swings and swings back, but it's interesting. Another one, we got our beauty NVIDIA, largest company in the world last time I checked. Maybe that changed because if you look at the last month, they're down 13.48%. Why are they down 13.48%? Well, one of the reasons comes into that is AI profitable, right? If it's not profitable for companies, people aren't going to be buying the GPUs, the chips from NVIDIA for AI because they just be like, okay, AI isn't worth it, right? But another reason is that we have Google and Meta striking a deal. And this deal is that Google will sell Meta TPUs, which is different than a GPU. G in GPU stands for graphic. T in TPU stands for tensor, which from my my limited knowledge of how deep learning works, it's just the way we're formatting arrays and such. I don't know if that's what it's referring to. But from a brief Google search, what I was seeing, TPU versus GPU, look at this bad boy. So we can see that while TPUs can offer superior speed and cost effectiveness for specific large-scale tasks within Google's ecosystem, GPUs are more flexible widely across different cloud providers and on-premises solutions and offer broader software ecosystem. So in my mind, I think straight to like Apple, right? The Apple chip, the M1, M2, M3, and plus variations of those work great in their ecosystem. If you had another company try to use that chip, like Google try to use a M1 chip, it probably wouldn't work, to my knowledge. At least there'd be a lot of hiccups probably coming with it. So in the same aspect, Meta's like, okay, Google, let's get onto your system, your software, because you're providing an alternative. And sure, it might lock me up in your grid a little more, but hey, I want a long-term relationship with your company because these are more cost effective, and we'll stay in your system if you can provide what we need because it's more cost effective. So, I mean, if Google can get some more mass adoption, I mean, Meta's a pretty big adoption to me, right? But if they get adoption from other people in this AI department towards their TPUs, that could put a big hole in NVIDIA's revenue. Just because I know Meta is, one of the biggest companies in the world, but also one of the biggest clients of NVIDIA. And that's why we saw that NVIDIA share price drop quite a bit on news. I think it dropped like 6% like that day or something like that. But you can see over the last month, it's down 13.41%. And it's barely up over 3 months, 5.76%, which if we look at VU, let's look at the S&P. That's underperforming the general market, which is crazy because NVIDIA, skyrockets every day, right? So that's something very interesting, large development in the AI world there, so something to keep our eyes on. And then Kohl's. This is something that caught my eye because I saw someone post about, I knew about Kohl's. Kohl's was not on my radar, I can tell you that, not on my 2025 end of the year Q4 bingo card. But let's look at the results. So look at 1 week. They're up 52%. Okay, all right, Kohl's, what's going on here? I don't know if they're pulling some rabbit out of their accounting hat, but kind of what came out of this is they had a strong beat on EPS. So earnings just really came out nice. Full year guidance was upgraded. So they're expecting higher growth in the future. And then, the stock jumped 30 to 40% in a single trading day. What else do we have? Yeah, revenue also beat estimates. So basically, they just came in hot with revenue. And when you come in hot with revenue, your earnings are going to be greater, your EPS is going to be greater, which if you're going a DCF model, your price will jump, which a lot of people use a DCF model. So we can see, let's maybe look at their longer term trend. Okay, so yeah, that guy, you really saw Kohl's coming. Good for you, because over the last 5 years, they're down 26%. So if you look at an all-time high value, It's at a 62%. So this is kind of a zoom out situation and determine if this is a buy. Because if you look, since the beginning of 2025, yeah, I'd say that's fair. They've been kicking butt basically. I mean, they bottomed out in April and it's been up since then this year, which is great for them. But if you're looking at a longer term chart, yeah, it's nothing to really be impressed about. And wow, if you look at that, that's crazy. So, let's see, they're trading at 24 bucks a day. Oh my gosh. Wow, that's crazy. At during the 2008 recession, they were trading at a higher valuation. So point being, if you're seeing Kohl's, they're vacant. A lot of their value probably comes from just owning the property. I mean, the real estate, the space, if they wanted to sell it for some development or something. I don't know. If you want to buy it, that's your prerogative. I'd say you really have to look into it because when I see a chart like this makes me scream. This is horrible. Minus 30% all time. So since they IPO'd, they're down 30%. Yeah, it's not the best thing considering they IPO'd in 2000. So in 25 years, they've lost 3/10 of their value. Not necessarily what I'd be looking for a long-term investment, but if that's you, that's you. So that's pretty much all for the stock news for the day. So we can get into a couple of things here. Let's look at the chart, and I've been touching this up. I gotta double check some numbers because last time they seemed off. But we did actually slow down our contributions. Why would I slow down? I preach always investing. Well, I plan to be closing on a house in 2 weeks now, so money gets a little tight in that situation, and I want to make sure cash flowing fine for that transition period. And then, so long as cards play right, save up right, we'll just play catch up at the end in May before the 2025 contribution time period is over. So we'll play catch up on it, but hopefully within 2-3 weeks we get back to putting some more in. Granted, it wasn't the worst time to not be investing. It's the market hasn't been going crazy in that time period, so I didn't really miss out on too much value, maybe a couple bucks. But we can see our difference values here. So portfolio profit, we're sitting at 8,692, 40 bucks more than last month. We'll take a nice 40. If we're looking at the difference in value, we're currently outperforming the market by $709.47. And this is what I touched up a little bit because we had a huge spike up here before. And I was like, wow, that doesn't really make sense. But then I actually started double checking a lot of the values going back through my chart. And it seems like we've been kind of floating here. So touch that up. We'll double check it for next time around. Since I did have this loaded in, let's just see some numbers for NVIDIA. So, yeah, all right. Yeah, the volatility of the stock's been up a little bit. If you want to look at like compared to a couple months ago, since July when it bottomed out over there. So volatility has been increasing on it. Moving average has still been looking great, but yeah, I mean you can see that. So the red is moving average of 50 days, and orange is moving average of 200 days. If this red starts coming down, you're going to have the cross of death or whatever, and then that just means the stock price is slowing down. But realistically, it's a forward look indicator, past look indicator. You're just lagging on it, so it doesn't really tell you too much. But point being, although standard deviation is pretty low on NVIDIA, it has been ticking up slightly. So a lot of that comes from the fact that it's dropping in stock price, which will change the volatility chart of it. But it could also come from trading volume. Maybe we might be able to see that quick while we're in here. Let's look if that loads. Yeah, okay. So yeah, trading volume's been pretty steady on this still. Definitely going up a little more sale volume, obviously. So nonetheless, these are our results so far for the Roth IRA portfolio. I think it's still going great, in a great position. Happy to end the year. Once I get some contributions from my job, we'll also go over the 401k because that's going to be in a great position as well. And then we'll also do a bit of an asset breakdown in February when I turn 23, just to see where my net worth is at. So stay tuned for all that. I did get access to Robinhood Banking, so I plan to make a video on that this month, hopefully. It's only on mobile right now, so it's going to be a tricky video to make, but nonetheless, it'll be good. So thanks for tuning in. Make sure to share with your friends, family, subscribe, comment. I reply to all my comments. Love to reply to those. And I'll see you guys in the next video. Thank you.